Welcome to 2026. The year finance is completely changing. If you've ever felt left out of the investing world because you couldn't afford a big house, government bonds, or rare collectibles, this video is for you. Today we'll explore how the financial world is moving from traditional systems to on-chain systems, what blockchain really is, what tokenization means, why real-world assets, or RWAS, are exploding. And most importantly, I'll show you step-by-step how to buy your first tokenized asset safely, even if you've never touched crypto before. By the end, you'll understand why 2026 is the year that anyone, anywhere, can access the financial markets like never before. But here's the crazy part. This isn't some future prediction or tech fantasy. Major governments, banks, and billion-dollar institutions are already moving assets on-chain. What used to be exclusive to the rich is now being open to everyday people. And if you understand this shift early, it can completely change how you invest forever. The problem with traditional finance. Before we dive into blockchain and tokenization, let's take a look at why the old system isn't working for most people. Traditional finance relies on banks, brokers, and intermediaries. If you want to buy a government bond, a piece of real estate, or invest in rare assets, you often need thousands or even millions of dollars to start, to deal with high fees and paperwork, to wait days or weeks for transactions to clear. For decades, this system has limited access, slowed down innovation, and created inequality in who can invest. That's where tokenization and on-chain finance come in. What is blockchain? So what is blockchain, and why is everyone talking about it? A blockchain is a digital ledger that records transactions in a secure, transparent, and tamper-proof way. Imagine a Google Sheet shared with millions of people worldwide. Every time a transaction happens, it is verified by the network and added to the sheet. Once added, it cannot be changed or deleted. Practical example. Let's say you buy a tokenized piece of real estate. Normally, a bank would record this in its private database, but with blockchain, your ownership is recorded publicly, securely, and instantly. No middleman needed. Extra insight. Blockchains are decentralized. This means no single bank or company controls the ledger. That's why they're considered trustless and transparent. You don't need to trust a middleman anymore. Understanding tokenization. Next, let's talk about tokenization. Tokenization is simply turning real-world assets into digital tokens on a blockchain. Each token represents a fraction of the underlying asset. For example, a $1 million property could be divided into 1 million tokens. Buying 100 tokens would give you ownership of 0.01% of the property. A government bond worth $10,000 could be split into 10,000 tokens. Now anyone can buy a fraction without needing to invest thousands of dollars up front. This democratizes access to investment opportunities and creates a liquid market for assets that were previously hard to buy, sell, or trade. Why RWAS are exploding real-world assets, or RWAS, are growing at an unprecedented rate in 2026. Why? Because tokenization removes barriers to entry. Examples: tokenized treasuries. Governments issue bonds on-chain. You can buy, sell, or trade them instantly. No broker needed. Tokenized real estate. Fractional ownership of properties worldwide. You can invest in a Manhattan apartment, a Miami condo, or a European villa without buying the whole property. Luxury assets and collectibles. Artwork, rare sneakers, and even sports contracts can be tokenized and traded globally. These markets are exploding because they allow liquidity, global access, and smaller investment amounts. How tokenization changes everything. So why is tokenization such a game changer? Accessibility. Anyone with an internet connection can invest. Liquidity. Assets that were once hard to sell can now be traded instantly. Transparency. Blockchain ensures every transaction is recorded and verifiable. Lower costs. Fewer intermediaries mean lower fees. The future isn't just digital currencies. It's digital ownership of everything. Real estate, bonds, art, even private equity could soon be accessible through tokens. Step by step. How to buy your first tokenized asset. Now let's get practical. Here's how you can buy your first tokenized asset today. Step 1. Get a wallet. You'll need a digital wallet. Popular options include MetaMask, Trust Wallet, Coinbase Wallet, and Argent. Wallets come in two types: self-custody wallets, you control the keys, full control, more responsibility. Custodial wallets, platforms manage security for you, easier for beginners. Step 2, fund your wallet. Most tokenized assets require Ethereum or a similar blockchain token. Buy crypto from Coinbase, Binance, Kraken, or other exchanges, then transfer it to your wallet. Step 3, choose a platform. Some platforms for tokenized assets include real estate, realty, solid block bonds and treasuries, securitize, tokeny collectibles and art, Curio Invest, Maecenas. Step 4, buy your first token. Select the asset, choose your amount, and purchase. Congratulations, you now own a fraction of a real-world asset on-chain. Custody and security custody is key. Self-custody means you hold your private keys, full control, but also full responsibility. Lose the keys and the asset is gone. Platforms now offer managed custody where they store your tokens securely. And in the near future, banks and institutions will provide custody for tokenized assets, making it even safer for beginners and professionals alike. Real examples and success stories. Some real-world examples today. Realty. People buy fractions of US rental properties and earn rental income proportionally. Securitize. Tokenized corporate bonds and US treasuries are available to global investors. Curio Invest. Tokenized luxury cars and collectibles are being traded worldwide. People are already earning income and trading real assets without banks or brokers. The future is here. Tokenization is changing how we own, invest and trade. From real estate to government bonds, anyone can now access assets that were once limited to the wealthy or institutions. Start small, learn the ropes, and watch as the financial system of 2026 opens doors you never imagined. If you found this guide helpful, like, subscribe, and hit the bell for more beginner-friendly insights into the future of money. The financial system is evolving fast. Don't get left behind.